Uh-oh, the oil price just went up $5. Okay, now imagine a silver cartel. And you got some Chinese guy who's the director of the silver cartel. This is potentially dynamite for pushing up the silver price.
Gold's been volatile. I saw on Friday it got knocked down again. It went back below 2,400. It got almost to 2,480 during the week, new all-time record high, and then sold off quite a bit on Friday. Same thing with silver. They knocked silver back below 30. In fact, intraday, again, it traded below 29. Just, again, I think a great buying opportunity in the metals. The dollar also rallied a bit. Again, I think on the belief that Trump presidency is bullish for the dollar because it's going to mean bigger deficits and more inflation.
Why they do it this way, but they have the gold in their balance sheet on the asset side and the revaluation account, which mirrors it on the liability side. The rule is you can't offset a liability with your gold, and for whatever reason, it's still valued at $35 an ounce across all of Europe, as an example. The Bretton Woods number. Now, I'm not sure. I used to know. I mean, it's been so long that why they moved the U.S. price up to 42.22. I don't remember exactly why, but suffice it to say, the official price in the United States is 42.22 on the books.
In today's market analysis, we're turning our attention to a provocative development in the commodities sector. The potential emergence of a silver cartel, reminiscent of OPEC's influence over oil prices. Financial expert Jim Willie has raised intriguing speculation about a coordinated effort by major silver-producing nations, with China possibly leading the charge. Such a cartel could dramatically sway silver prices by adjusting production levels, much like how OPEC's strategic decisions impact the oil market. As geopolitical tensions escalate, particularly between Ukraine and Russia, we're seeing increased investor appetite for safe haven assets, driving up the prices of silver and gold. This geopolitical backdrop, coupled with anticipation of Federal Reserve rate cuts, is creating a perfect storm for precious metals, with silver prices seeing notable gains. In related news, Klaas Knot, the head of the Dutch central bank, has highlighted the significance of gold reserves and the potential for gold revaluation. This move could be instrumental in stabilizing financial balances amid growing concerns over U.S. dollar dominance and national debt. The idea of revaluing gold as a means to address debt issues is gaining traction, suggesting a possible shift in how nations manage their financial strategies. Senator Cynthia Lummis has also made headlines with a proposal to partially revalue the Federal Reserve's gold holdings to fund a strategic Bitcoin reserve. This development underscores the increasing interest in alternative assets and could signal a broader shift in investment strategies. The demand for silver is further buoyed by advancements in solar energy technology. New developments in photovoltaic cells are driving higher silver consumption, highlighting the metal's critical role in green energy sectors.
Times have you seen the oil price move based on comments by the OPEC director? Well, we're considering an oil reduction in output in the Gulf region. Uh-oh, the oil price just went up $5. Okay, now imagine a silver cartel. And you got some Chinese guy who's the director of the silver cartel. And I don't know what they're going to call it. But then he comes out with a statement. I'm talking like 18 months down the road, Chris. Comes out with a statement like, well, we're thinking about Mexico and Chile reducing by 10% their silver output. And the silver price goes up $2. If it happened for oil with respect to OPEC, it could happen with silver with respect to a new silver cartel. This is potentially dynamite for pushing up the silver price. Imagine they say, well, okay, and you know, Mexico is all over the news. They're talking about, and the Supreme Court has got to settle on this. It's a restriction on foreign direct investment to the mining industry. And it's not approved, but just having it floated and potential, it's brought about a 60% decline in foreign investment in Mexican mines. Okay. So they're going to see a reduction in the future months for output. Okay, I'm telling you, this silver cartel is going to be a big item. and I'm watching it, and there's not much news with the silver price. And India and China are really angry. India and China are building out solar farms. In the United States, it's largely California. And I've had two, I'll tell you, my consult calls are very valuable. I had an Ohio client and I had a Virginia client, each one reporting rather expansive solar farms in those states, Ohio and Virginia, called PV, photovoltaic, PV. The PV cell is had 2 or 3 rather impressive developments, improvements in the last couple of years, maybe 3 or 4 years. And what's really remarkable, Chris, is it does not bring about less silver. It brings about more efficiency and the motivation to do more silver, to do more panels, more volume, maybe a little bit less silver within, like they're calling it a square meter. How much silver per square meter, how many watts is produced per square meter. It's really quite interesting, but the developments are not bringing about a lower volume of silver demand. It's more.
As market sentiment fluctuates amid political and economic uncertainties, investors are being advised to consider the safety of precious metals like gold and silver. The volatility of silver, in particular, makes it a wild card in investment portfolios, often reacting unpredictably to market shifts. With the stock market showing signs of instability, many are turning to gold and silver as safer havens. This shift could lead to new highs in precious metal prices, particularly if current economic and geopolitical conditions persist. Investors are encouraged to evaluate their strategies carefully, with some eyeing silver sales at $50 per ounce, while others are holding out for $100 per ounce. As we navigate these turbulent waters, engaging with market predictions and adjusting strategies accordingly will be crucial for navigating the evolving investment landscape. Stay tuned for further updates and insights on this dynamic market.
Valuing gold. In fact, I think I can pull up here really quick. Bear with me. I'm going to do this as fast as I can. I just read something today from it. He says, let's see, the head of his name is Klaas Knot. And in October of 2022, he is the head governor of Dutch Central Bank. He said the balance sheet of the Dutch Central Bank is solid because, make this bigger so I can actually read it, is solid because we also have gold reserves, and the gold revaluation account is more than 20 billion euros, which we may not count as equity, but it is there. Now, it's interesting to understand that when we talk about the revaluation account, that, why do they give it that name, I guess, first and foremost? Why would they give it the name of a revaluation account if it wasn't something that they noticed? And I think it's option number 4, right? And option number 1 for the Fed would be to inflate, the way all governments have done. And option number 2 would be to default. Option number 3 I focused on for the last 4 years, and that was incite the world to no longer trust the United States, to no longer have a need to use the dollar for oil, to sign an executive order to go green, to stabilize the country, weaponize the dollar in the treasury market, and have everyone dump dollars. There's something called Operation Sandman that people should Google. Over 100 plus countries in theory, and I don't know how true this is or not, but Mike Adams sure thinks it is, and he's a smart guy, that they've all agreed at one point to flip the switch. And it would happen at night is the way that it's written down, the night of the switch, they call it, where in unison, they will all dump US dollars in treasuries. Now, if all of a sudden Project Enbridge and the unit token get ratified and it comes out in October, I mean, it is not beyond the scope of my imagination to see that come to fruition. The slowly, little by little divestiture of dollars and treasuries, which we have seen, is positioning. And the accumulation of commodities like gold, which has doubled the performance of the 10-year treasury for 25 years with no counterparty risk. It's happening. So all of these countries, and we're supposed to be, the United Kingdom is now going to be the biggest purchaser of our treasuries, along with Ireland and the Cayman Islands. I got some oceanfront real estate to sell you in Minneapolis if you believe that that really is legit. It's not legit. I mean, Jim Willie says they're paying them under the table. I don't care what it is. One broke nation buying the debt of another broke nation is just not really smart. And it shouldn't be even considered an asset. But it is, and it won't be the way things are going. It looks like the way that if indeed the unit comes about and you don't need to hold treasuries because gold is outperforming it with no counterparty risk and will be the primary component of a new settlement currency, you don't need to hold dollars either that are being inflated away by $100,000 a second. 1, 2, 3, 4. That's $1 trillion every 100 days. $100,000 a second is being pissed away and bankrupting your grandchildren and my children and all of these people that are working their tail off right now only to be indebted by fiscal irresponsibility. So the dollar's days are numbered ultimately, as are the treasury. I do believe that. So as we talk about the gold revaluation account, to me, that's option number 4. You just revalue the price of gold as high as it possibly can go, legitimately, and write off your debt. Now, even in the case of the U.S., it's pretty bad because every $4,000 increase in the price of gold, if we have 261 million ounces, would result in $1 trillion that could go free and clear into the treasury account, the TGA. So you raise it to $20,000, that only gives you $5 trillion free and clear to go into the treasury. And we're still, we have 35 trillion in debt and 150 trillion in unfunded liabilities. So it's not a magic pill, but it certainly helps. Anyways, getting back to your point. Trump spoke at the Bitcoin meeting. And right after he spoke at the Bitcoin meeting, there was a lady who spoke, and her name, Senator Cynthia Lummis was her name. And Cynthia Lummis proposed funding the strategic Bitcoin reserve by partially revaluing the Federal Reserve's gold. And she wrote a bill to do this. And she's so now you got the West talking about it. She says that Treasury Secretary with no congressional approval needed, that would be our friend Janet, could instruct the Fed Chair Jerome to revalue U.S. official gold, which mechanically creates a deposit into the U.S. Treasury General Account, TGA, free and clear. The Treasury can spend as it sees fit. And Senator Lummis's proposal is revaluing the gold and taking some of that excess money and using it to buy Bitcoin for a strategic Bitcoin account. The point I want to get across is they know it's there. Now, the question is our gold really there? Is the 261 million ounces really there? It hasn't been audited for a very long time, but I find it ironic that they call it the gold revaluation account. It's almost too ironic to not be applied. Again, too stupid to be stupid. I don't know. It just seems like they have that in their back pocket.
That ultimately faded because people thought Trump was going to come in and really cut government spending, balance the budget, because he ran on that. The first time he ran, he was going to shrink government. He was going to, pay down the debt, right? He's not going to do that anymore. He's just talking about growing the economy. If we just grow the economy fast enough, that'll take care of the debt. At this point, that's not even possible. The debt is too big. The debt is growing too much, and interest rates have to go up. One of the ironies of a lot of this is people think that Donald Trump winning is more inflationary than Biden because, he's going to stimulate the economy more with tax cuts. And so we're going to have more inflation. And for that reason, they bid up the dollar. People think the dollar is going to go up under Trump because now the Fed is going to have to raise rates more to fight the higher inflation that's going to come from the stronger growth or whatever they think that the Trump policies are going to result in. But the truth is, if we really are going to have more inflation, that's not bullish for the dollar, that's bearish for the dollar. More inflation by definition means dollars buy less. And if the dollar is going to lose more of its purchasing power, that's a reason to sell dollars, not to buy dollars. And the political pressure is going to continue to mount, regardless of the outcome of this election, on the Fed to ease monetary policy, to cut interest rates, to print more money, to relaunch QE, to prop up the economy. Because the unemployment rate is going to go up regardless of the outcome of this election. That doesn't mean that the nation, is better off sticking with Biden or sticking with Harris, because I think things will get even worse. The problem is the Republicans getting the blame. But, I've had these concerns for many election cycles because I keep thinking that it's going to blow up. And we get through another 4 years and it doesn't happen because we keep kicking the can down the road. Well, again, eventually we can't kick it anymore. Somebody is going to get stuck with it. When it happens, the incumbent and the incumbent party, unfortunately, are going to get the lion's share of the blame for problems that have been built up over not only years, but decades. And both parties have had culpability as far as running up the debt, but it's going to be whoever happens to be at the helm of the ship when it hits the iceberg that is going to take the blame. Right now, Biden's getting the blame because it's a rough ride, but it's not nearly as rough as it's going to be. We'll see how the markets respond to the Republican convention, to Biden stepping down. Gold's been volatile. I saw on Friday it got knocked down again. It went back below 2,400. It got almost to 2,480 during the week, new all-time record high, and then sold off quite a bit on Friday. Same thing with silver. They knocked silver back below 30. In fact, intraday, again, it traded below 29. Just, again, I think a great buying opportunity in the metals. The dollar also rallied a bit. Again, I think on the belief that a Trump presidency is bullish for the dollar because it's going to mean bigger deficits and more inflation and therefore a tighter Fed. I think it's going to mean an easier Fed and more inflation, which is bad for the dollar.
While some analysts initially expected rate cuts in the first half of 2024, recent inflation data has pushed these projections back. The current forecast now suggests the first rate cut could occur as late as September 2024, provided inflation data shows sufficient progress. The upcoming US presidential election adds another layer of complexity to the economic outlook. Schiff, known for his contrarian views, challenges the notion that a Trump presidency would strengthen the dollar. Instead, he argues it could lead to more accommodative Fed policies and higher inflation, potentially weakening the dollar while boosting gold prices. During Trump's first term, there was significant optimism about economic growth. However, Schiff notes that promises to cut government spending and balance the budget were not fulfilled. Trump is now focusing on growing the economy to address the debt, a strategy Schiff believes is unrealistic given the current debt levels and rising interest rates. Trump has promised to end what he calls the inflation nightmare quickly if re-elected, assuring voters of lower prices. However, Schiff criticizes these promises as oversimplified, arguing that the underlying economic issues are too complex for such immediate solutions. Trump's economic strategy includes controversial trade policies, such as a 10% tariff on all US imports and a 60% tax on Chinese products. Schiff contends that these measures will not lead to the instant economic transformation Trump promises. The debt crisis remains a significant issue that both parties have contributed to over the years. Schiff emphasizes that addressing the debt problem will require difficult solutions.
Is in his promise of a quick fix. He basically told the nation that if he's elected, inflation is going to go away immediately. All you have to do is elect Trump, and the Biden inflation is going to disappear. No more inflation. The economy is going to boom. Real wages are going to rise. It's going to be returned to, unparalleled prosperity, right? We're going to go from the worst economy ever to the greatest economy ever. And all we need to do to get there is vote for Trump. And he just has to assume office. And just based on, the power of his presence, right? With whatever he's going to do, it's going to instantly transform the economy.
As the election approaches, markets are closely monitoring political developments. President Biden's decision to withdraw from the 2024 race has firmed gold prices, as investors seek safe haven assets amidst political uncertainty. In conclusion, Schiff predicts that inflation will continue to rise, regardless of the election outcome due to existing economic conditions and past policies. The Federal Reserve will face increasing political pressure to ease monetary policy, cut interest rates, and print more money to prop up the economy as unemployment rates are expected to rise. The debt crisis, which has not been sufficiently addressed in political discussions, poses a significant threat to future economic stability. Investor sentiment towards gold and other safe haven assets is likely to be shaped by these ongoing economic challenges and political uncertainties in the coming months.